Well, good morning, everybody. Let's go ahead and get started. Welcome to the Hawkeye session. And this is Thursday morning, June 25th, about 6 o'clock in the morning Central Time. My name is Brian White. I am with Trade Masters, filling in for Al Mittman this morning. Let me go back to this screen and end that right quick. We will just pause that off. There we go. Again, welcome, and we will jump right in. Let's go ahead and go right over to our normal routine. Let's look at our charts first, real quick. Just giving you a radar picture. Again, here's our 8 pairs. We are currently in a trade right now. We are in the Euro US. We'll look at that here in a moment. We may have some opportunities today. This really seems to be the only one that was clear. We possibly could get in the Euro Yen, but let's do our weather report first to see what the market's going to look like today. I don't want to miss that piece. So let me go over to my notes I took this morning. As you guys know, anytime you do any sort of real lesson, you're going to have to prep for it. So today I dug in a little bit deeper. Since this may be our last one for the week, I want to make sure that we got a good picture of what's going on. So again, good morning to everybody. And those who are streaming, you're just about 3 seconds behind. So not a big deal. We may be looking at, like I said, our last real trade day of the week. So I want to make sure that the first part of this session is very, very useful to you guys, whether you get a trade or not. And today, the first thing I want to make sure that we notice is not a pair. It is actually the calendar. So we're going to go right on over to our calendar screen. I kind of included the yesterday's results. I've been teaching you guys to look at what was previous, what was forecasted, and what came out. Not only did it beat it very, very strongly. Previous 4.5, forecast 4.4, and 4.4 was. So last night, all in all, Australia really did well as far as their numbers. So what does that mean for us today? When we look at what's going on earlier this morning, we had some news come out, but we have United States news, dollar news at 7:30. So we're going to be very, very careful today. So we have major U.S. data. And that means our first job is not to be too aggressive. First job is to understand the weather and make sure we protect ourselves from getting pulled into a pre-news type trap. So and this is why I would call today a high impact news trap morning. We have core PCE, GDP, jobless claims, durable goods, income, all and spending all stacked together. And the market may already have a bias in that, but data can validate it and so or interrupt it, or it can even reverse it. So before 7:30, we can build a plan, but we do not need to force a trade just because the radar has numbers. So I'm going to make a rule today that 15 minutes before 7:30, I'm going to be out of trades. That's what I'm going to be doing, whether it's a win or a loss. So let's dive in and go into our charts directly. And we've already hit our 10 pip on this one, and we moved to 7 or pretty darn close to it. Let me go ahead and measure out before we move on. I don't want to give less credence to this. I did it quickly. I'm a little off, so I need to come down right about there. Okay, we'll just move this down just a bit. That was the top of the candle. Close enough for me for that. And no matter what happens now, we are going to have a winning trade for the day, at least a 0.5% gain for the day. So we move right into our dollar. I usually like to use the dollar down here. I've added a Brent. That's your oil. I'm going to move this over. We're going to blow this up a little bit bigger, and we're going to start from our day chart. Um, Looking at the daily, let me squish and squash. You can see how, man, we broke this ceiling. I really thought we were going to blast off yesterday. Yesterday was not really a buyer's day for the dollar. It started that way, then pushed back on us. So I want to be direct here. I would not call the dollar unclear. The dollar has moved with authority on the daily and the 4H. So this is strength. The correction is not there is no direction. We actually have direction. The correction is the dollar has already traveled, so we don't want to be chasing it. So we have to be careful about where we enter those trades that are related to the dollar. So that is a big difference. So bias is clear. We have good bias, but permission is not automatic here. Now we're starting off with a little bit of a push up. Looking at our 4 hour, kind of the same thing. Definitely a different look for the dollar. Let's drop down to the 15-minute though. Let's go 1 hour first. Again, you're seeing what's been doing, and this is yesterday, and it just kind of flattened out for us. It really didn't do anything. We had the red ribbon turn red as well. Dollar, the dotted line turned red as well. They're not crossed, so it's kind of gone sideways on that. So when we zoom in on this, this is where discipline comes in with the dollar. Dollar is holding elevated structure, but it's also getting also digesting after a strong push up. So if it holds and starts building again after the news, dollar trades can definitely stay on the table. If it breaks down from this local resistance and we pause, we don't want to be married to the dollar strength idea. We want to let the dollar keep doing what it's going to do. I still think, we marked this area off yesterday as far as a position. Looking back now, I would be moving my happy space to here for the dollar on the 1 hour, and then look at it on the 15 and see where it looks like. And you can see where we created the resistance. Remember, the higher the time frame, the more reliable any signal is, whether that be Hercules, Sherlock, Atlas, any of those, it's going to be more reliable. So it's just the way the things go. So that's the dollar. Let's jump in quickly into our gold. And we're going to look at the daily chart of gold too. It's not much different. It's the opposite of the dollar. Not much different there. Gold is giving us the opposite side of the weather, as we've been talking all week. Gold is definitely weak, and that fits with the dollar strength story. But notice where it is. It is near a floor. It's getting there. And there's actually two of them. We got one right here, and then we have this area right here. So we've got that dollar going on there. And this is where less experienced traders seem to short because the candle's red. But experienced traders are going to ask, do we still have the room, or am I selling in that support area? And that is the lesson today. Weakness is not the same thing as a clean short. So be very, very careful of that. Dropping it down to the 4 hour, giving you the same look. We did create a little resistance supply area right there. And then we got 15-minute here. And we flattened out yesterday. You can see the wedge pattern forming. A wedge pattern just means a time of consolidation. Yeah. Then we added something new to our weather. We went to, let me go to the daily again, and we went to Brentwood oil. And oil is now, again, the weakness is obvious. The bias is obvious, but look where we're sitting. So with the news today, with the oil where it's at, we want to be very, very careful. We're also, we don't want to trade this. We're not trading it, but we're looking at this as weather. Brentwood oil is weak and pressing against that support area. Public Energy News is telling us the oil risk premium has cooled as the Iran-U.S. Strait of Hormuz flows improve, but the geopolitical backdrop is still not magically gone. So Brentwood's basically saying less panic in oil, but still the headline sensitive stuff. And that fits that cloudy market better than a clean risk on or risk off type label. So that is our Brentwood. I'm going to flip this back to our 15-minute US yen. Looking for any questions in the room before we move on to our radar. I don't see any here. Let me check real quickly our followers on the YouTube channel here. Let's make sure we're moving up. No questions there as well, so we're in good shape there. Let me move this up again. I can't tell where we're following at. There we go. Yeah, okay, good, 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 good. So we're in good shape there. All right, let's get back to our radar screen. And we're just going to pause this for a moment, sit back and watch just for a bit and see what happens here. Let's zoom in a little bit on the US. And I'm just going to get quiet and let you guys look and peruse for a bit. So let's just watch this and see what we can see happening in the next 5 minutes. All right. Again, we're seeing 7-0 on the Euro US. We're looking at the radar and we're noticing we've got a 7-4. And we talk about the Hercules spread. That is the numbers between what we're looking at. So let's start with the Aussie US. We're showing a 3, then a 2, then a 6, and then a 7, a 4, a 5, 2, and a 1. Again, these are pretty good numbers. Anything we're looking for five and better. I would not trade the pound US and the euro US simultaneously, but if one gets out, we can re-enter again. Potentially, we can look at the euro yen, but remember, we're not out of this. And this was once resistance. Usually, a lot of times these will become a support area. So let's get through this one. I think we're going to have an opportunity here, and we have room. So that's a nice thing. So if we come in and we measure where we're currently at, find out where our 14 pips is. I would like to be above that candle there. And we would be right now. Do we have room with demand? We have this little area here that we have to respect, but it is not, you got your almost 10 pips away, which is kind of where you want, and then clean hair. So I'm going to go ahead. And again, we're doing this in a demo. I'm not live this one. I'm live on the Euro US. At least I was. It may be out now. I'm not looking at my live screen, but we're going to go ahead and set this up. Again, we're going to do what we always do. We come in 1%. Now, if you're experienced, you can increase that to 1.25, 1.5. But we never want to go more than 1.5 on a day trade because remember, 95% of traders lose money. You don't want to do that. We do a 17.5 pip target with a 14 pip stop, and we just put it in like that. So once we set up a trade like this, now again, I'm doing this for demonstration purposes, and we got in there. We're not quite where I wanted to be. But we're there nonetheless. So what we do next is then we take our measurement and we go from where our entry is to a 10 point, which is right at the 183.51 area. And what I like to do is draw a visual line. We said 59, that's it right there. And I'm going to put this out a little bit longer because I don't know how all that works. So put that line right there. And then what we're going to do is I'm going to just, we take 25% off. So we'll put, let me move my microphone here so I can get to my keyboard. Hopefully that doesn't cause you guys problems. Remove, and I'm going to say four, that's going to be 4,000. Let's call 4,500. So that's going to be 9, 8. That's not four. That's not quite four. It's going to be more than that. I am not taking off enough here. So that's going to be 8,200-ish. So not so that's going to be 16.4. That's too much. Let me just do my math here. Let's just get my calculator out and see how far off I am. We're not in a rush. It's not blasting down on us right now, so it's not near as important. So what I do is I take my 26,215 times 0.25, and I come up with 65.55. I was kind of halfway in between the two. So we're going to remove 65 and we're going to put alert on this. That way we don't have to stare at it. When it comes across, it'll beep and let us know, and we move on. And now we're at a 6-0. Both are flat. That doesn't mean we have a lot of volume happening right now. Remember, we're pre-news. And so we really have to wait. The 7-0, it moved nicely during one candle, but now it's kind of stalling out again. Again, the 7-2 seems to be moving nicely as well in the pound US. I like the US CAD again. We're going to probably get a buy signal. It's breaking out. I really like it, but we're only a 3. So structure-wise, it's good. Momentum-wise, it's not. US yen, we're only at a 1. So right now, we're looking at the ones that we should be looking at, and they're not highly correlated. The only reason I would say they're somewhat correlated is the fact that we're both in the euro, we're both shorting the euro, and both the US and the yen are safe haven currencies. So little correlation issue there, but it's okay for this particular illustration. So again, let's look at our radar overall since we've had a little bit of time to think about it. Let me make sure there's no questions in the chat rooms at all before we dive in. Welcome, Jonathan. Good morning. If you are in the Telegram or in the what do you call it? The YouTube channel, definitely keep chat live. Jonathan can pretty much answer any question. Let us know where you're from as well. Let's look at why we got these two sitting here in front of us and we're watching the screen, and let's talk about the overall Hawkeye look for today. I wrote some notes down. I've been up since about 3:30 this morning, so been a long morning. So, all right, let's look at this since we're already in the trades. The radar is active, so we have several strong, obviously several strong Hercules readings. But I want to make sure we're careful because active does not mean clean. We need to have a lot of structure. A lot of the board is the same dollar story that we've been talking about showing up for different pairs. The US yen, except we don't have Hercules spread. The US CAD, great structure, don't have the spread. Now, if it hits four, I may take it on my live account. Again, not telling you to do so. We have the Euro US and the Pound US we've already talked about. The Aussie US is kind of interesting right now. Um, I wouldn't jump into that one. That one's been giving us some issues in the morning time, so I've made note of that as well. So many of these are obviously connected to the same dollar move, and our job is to not take everything. Our job is to find the cleanest expression that we can, the one that stands aside from all the others, is what we're looking for. And I think we found that in the Euro US, not so much in the Euro yen. Notice that our Euro is getting now stronger. It's no longer the zero, which doesn't surprise me. We just wait. It's still a six. And what will be nice is if we can have the euro yen hit that 10 pip mark again. I'm not so sure we're in a great spot with our stop. It is what it is. Again, that's not our live one. Our live one's the euro US, so we've already made profit there. Again, we don't want to get too riled up. Our Hercules are currently set at fast. We made that adjustment yesterday. It's not set at moderate. Yesterday morning I was at moderate, moved it up to fast. So these are going to be a little bit more responsive. It will have a tendency of making you a little bit more jumpy. Okay, so if you don't like that jumpy feeling, move it back to moderate. It just won't be quite as responsive. So you give and take on that. So again, US yen is really the one who's leading our teaching chart again today. I mean, it really is. And when we blow it up, I mean, 15 minutes a great picture. I mean, we don't have any Sherlock zones, but hopefully you can't deny what you see here in this move here. But we've got to be looking at it from a 4 hour standpoint. Um, we need to respect the tops that it's had, and that was Monday. So, and then we had the same thing happen on Thursday. So candle today is very, very important. If we can hold strong, we blow that up so you guys can actually see what I'm talking about. Over the last 4 hours, we've got a very bullish candle. We want to look at it on a daily though. And notice what our daily is. We've got this buyer's candle, got a lot of wick here, buyer's candle, mixed buyer's candle, mixed buyer's candle, buyer's candle. And what we've done is we've chewed up the past wicks. And if we go far enough back, we'll see we're right there again. And so that has to be respected because the last time we were at this price point is the price point that sent it all the way down here before it hesitated, and then panic selling came into play. And this is where we should have been buying. And we'll talk about that later on with our compass, because that would be identified in our compass. Let's see if I can, I don't know, I haven't published it, so I can't really throw it on there. But yeah, that's our picture, our learning picture for today. Um, it has, I mean, really, you on a daily chart, you have one strength on the 4 hour. We have a one strength on the 1 hour. So whatever news happens today, we have to see some momentum change. Otherwise, this is just going to be a slow grind and kind of like what it's been doing. It's been moving up, but it's been so slow, and we can't afford to get into those in day trading. We don't want to be in those in day trading. So again, there's a catch. The yen has also been very strong at the same time. When both of these currencies are strong, the chart can move, but it still becomes very, very tricky. Also, price is high on the structure. So I like the US yen as a teaching chart and maybe even a list watch list, but after the news. I do not like the idea of chasing it before the data. Let's see where we are on. Oh, look at there. Okay, we may end up hitting our full target here and our half target here before we ever get to the point of having to make a decision of getting in or out. Let's look at this US CAD though. This is a fun one. We're same kind of picture with the US yen. We're chewing up some really, really, really strong. Now there's no Sherlock here, but that doesn't mean there's not supply here. So let's look at this on a little higher time frame. I don't want to go too high on this because we're really going to want to trade this. And I don't want to cloud your eyes with too much uh-ohs. There's really not any. This is a 4 hour chart. So when we're looking at a 4 hour chart, bigger picture, we're still sitting at a two with the overall momentum. Now it's a three. The overall momentum since last week has been this is climbing a little bit. But the dollar overall has been strong on the 4 hour chart. We drop down to the 1 hour, get a little bit more spread here. And this is where our structure starts to take shape. We are just now eclipsing our ribbon, which is kind of important because we have to understand what our ribbon is, but we are just eating up this wick, so it's not quite broken out yet. What I would like to do is just to give myself a little heads up, I'm going to put an extended line right here. Ooh, okay, that's nice. Just like that. And what I'm going to do is I'm just going to set my alert on that line to let me know when it finally crosses. Okay, coming in. I must have just set the alert right away. That's crazy. That didn't work out so well. So let's do it this way. Add alert on extended. There we go. We are at point one, so we should have there we go. There's the clock we wanted. Okay. Now, if we actually not just touch, but we cross, that may be a time for us to go bullish. But remember, we are going into a news item. So let's drop it down to 15, get a better structure look at it, and you can see why we're hesitating. Great picture here that it just created here that we're just coming into, just chewing up. But we don't have the spread right now. Notice the trend is up on the CAD. So again, we're just going to be notified when we clear this supply. Isn't that kind of cool how that worked out? And that's our US CAD. We're where we're at. We haven't got far enough down to remove anything. We're still closing in 7060. So our euro weakened again. I always like to when we come back to the radar screen to look at the numbers. If you're not in a trade and you want to get in a trade, the potential is the pound US. I'm already in the Euro US, which is similar. Just be aware we have this floor that's still here. So not my favorite. Notice we haven't had the crossing yet. I would wait. I would definitely consider this later on, maybe after the news, right there in that area there as a pullback. I'm guessing if Al was here, he'd be talking about fair value gaps at this point, and that's probably one of those. That's the pound US. I wouldn't just jump because we're right into a headwind here. But if we measure off from the top, the bottom of this green, yeah, we've got 12 pips to the floor. That's kind of what we're looking for. Unless this breaks down below and closes below it, then this will be wiped out to some degree in our 15-minute chart. Now, remember, our floors are being calculated by Tide Fusion, which is set to a 4 hour setting. And that major floor is for monthly, so it will not clear out until the end of the month calibrates. So it's not the typical, here's the most recent floor. This is a strong daily floor that you would see, and you can see how many times we traded this, but you can see we're right at a major daily demand zone with the floor sitting right there. Our weekly floor has been broken, and that'll be recalibrated once we establish a new floor. Okay, so understand that part. It won't move it until we know it. And then we just got that look right there. And this is a good sign for all the pairs that we're currently in. We can see our numbers coming up as we speak. Oh, that's not what I wanted to do. I do that quite a bit too. There we go. So we're closing in on our target. We're only a few dollars away from the full move here, and no reason to move our stop. It's what it is, and we got a few dollars on our uh, probably about $8, $9 before we can hit our 10 pips on the euro yen. So again, it's gonna be waiting out the time. Um, and I want you guys to look at this because these two are very correlated right now, very structured the same. So That is a correlation issue matters today. So if we take the US long, US CAD long, the Euro US short, and the pound US short, we're actually on the same side. We have four trades thinking the same way. But we really may have just have $1 opinion multiplied four times. And that can feel really, really good, but it also multiplies your risk. So just a little correlation issue here to make sure you guys understand that. So if the dollar is the whole story, we want to make sure we pick one of those that we feel is the most mature and the cleanest and try to avoid the landmine of what's going to happen at 7:30 or potentially now. If you make it, it happens to go with the news, then you got lucky. If it happens to go against, then you're upset you were in all four. So just avoid it. Okay. Here's a couple of if-then things that you want to consider as I'm looking at this chart. Again, if the dollar happens to hold that support, reclaims the strength after the 7:30 hour, then definitely look into that US CAD, US yen trade. Those remain on our AB list for sure. If the dollar spikes higher right into that resistance area that we showed earlier. Don't chase it. Wait for it to pull back. You know it's going to pull back. You've seen it pull back. It always does pull back. It doesn't always go in a straight line. So we want to make sure that we're disciplined there. If by chance after the news that dollar breaks that support below after the data comes out, and it pause your dollar strength trades. Hang on. Don't force yesterday's story back onto today. Yesterday was very, very weak. So just be real careful with that. Gold. If gold happens to break that floor, gold weakness definitely becomes a stronger confirmation because of dollar pressure. Keep it in context. If gold happens to bounce from that support, be careful shorting it and be careful shorting the Euro US, pound US, and the Aus US into those floors because that gold bounce can signal dollar digestion too, or risk repricing, however you want to look at the same thing. Um, if $2 or $3 trades trigger all at once, just pick the one. Pick one. Do not try to turn the idea into three correlated risks. And if the board continues to stay choppy, it's not quite choppy yet, but I think it's going to get choppier before the news. That's not a failure on your part. Use the session, use the sessions to learn how professionals wait. There's not a professional sitting in front of their screen right now waiting for things to happen. They already have a plan in place, and they're going to do what they do. They already know the price. We're just trying to figure that out before. Um, let's see. What else do I want to make? Again, a high Hercules. Oh, this looks pretty good right now. We're moving right on down. What's our time? We got 4 minutes. That's a good drop, base drop. If by chance we form a Sherlock in here, I have rules to move it. I think I'm already there, but could move it. Um, I would just say Hercules, a strong Hercules number. Even though it's a seven into a higher time frame, a wall is not a green light to go. It's a reason for you to slow down, wait for a pullback in most cases. So we didn't have any Hercules sitting here, as you can tell. I can go to a 30 minute. I don't think I have one there either. I can go to the 1 hour. That's usually as high as I want to go. I want to be aware of that area right there. I can go even into the 4 hour and see that area right there. So this is a good example. Don't know why it recalibrated that, but it did. And now we've got this demand zone in there, but it's already there. It's this one I'm worried about. I've had a couple of things recalibrate, and really it's because I haven't turned off all my machines yet. So it's been kind of a busy. We got a lot of progress going on here. Anything else? Again, today we're not going to be trying to predict the news. We are preparing for what the reaction is going to be. If you're still trading on a Thursday after 7:30, I would say wait till 7:45. If the market gives us the structure, then we engage it. If it doesn't, if it gives us more noise, just walk away. I'm going to go play golf today. That's what I'm going to do. It's going to be a fantastic day. It looks like we're going to hit our target on our Euro yen, our Euro US, and that will be our 1% for the day. There it is. That is a picture moment. We took our trade, we had our 1%, and we did that within 30 minutes. That's a perfect day trade. Three candles. We didn't have to wait a long time, and we're getting ready to hit here. So let me go ahead and blow that up. And I've got to remove 655. And we're probably 630, probably not going to be hitting another trade unless something just really, really gets my attention. I don't know if this is going to go directly to this. We've got this little demand area we have to respect. Um, it may linger and kind of pull back. And the number 60, so the overall move is still down. We still haven't had the crossing. Remember, and this is an algorithm with multiple what am I looking word I'm looking for? Multiple moving averages involved. So be aware of that. Okay, here we go. There we go. So multiple moving averages. So there's going to be some algorithmic trading. Remember, our dotted line is not an algorithmic trading, but it is our first indication of a red dot and our ribbon moving averages, about 10 of them ribboned in. And I'm going to use this kind of theory inside of our legacy compass as well. You'll see that as well, which is a fantastic thing. Wow, my YouTube is a little bit behind. My channel, I should say. There we go. I'm gonna go to the end. And we just had a closing of the candle. And now we've got to prepare ourselves because we could have an initial in here. So I'm gonna go ahead just to prepare because if it hits it, I want to be ready to go. And we're gonna take 65.55 off of here, just like that. And there it goes. As soon as you enter 6555, if you've watched the last few weeks, you will know that this is immediate sign for the market to give me a green candle on the way up and then have to close it out. That is just kind of what it is. But we're ready regardless. It's still a 6-0. Now, yesterday after the session, I went ahead and put some more trades on. You can see our realized profit did go down. I wanted to play a couple things with, and it's over trading in a demo account. I probably should have just, if I wanted to build the demo account, I would have walked away, but I was doing um, some testing on some Hercules numbers, not Hercules, but Tide Fusion. It didn't go so well, but that's okay. That's what it's there for. And what's strange is we're only just a few pips away from that bottom, but we called it. We knew we can look back. It's just this area right here. It came right back in. And so again, this gives you an opportunity that if you're late to the game, you're a little late to the session maybe, and you're wanting an opportunity, a pullback into a Sherlock area. What this was once resistance, and now it's coming back in. This should have been cleared off. I need to be recalibrating my systems right now. Sherlock should not be. Let me see if I can, if it'll do it without me doing anything. So I'm gonna reload here. Maybe it'll do it for me. Blow that back up again and clear some of that nonsense out. Yeah, it did. I just needed to clear it. Oh, got a new zone. Probably should do that. As much work as I've been doing um, in TradingView, I probably should have had that done. Now, what this did do for me is give me a little bit of pause of concern because what I did not realize is that this was formed yesterday before I got in. But notice our 10 is there. So this is one of those perfect cases where I'm going to most likely grab my 10 pips and move to my 7 pip mark as quickly as possible because this is a pretty sizable zone. Now it could go halfway down and not be a problem. But with the news coming up and just take your profit and go. And now we're kind of we'll blow that up just a little bit bigger. We have quite a few people popping in and popping out. I don't know if they actually know what they're getting into and they're not sure what they're looking at. I hate that for people. Or they're just popping in because they're driving down the road and wanted to listen to something different. All right, let's go ahead. How far are we? We got 1 pip spread and we're Gonna have to get right about there to get to our signal. So I'm gonna go ahead. We're only one pip away. Now, Al in the past would have gone, well, I'm so close, I'm gonna go ahead and close it out. I'm not. And the reason being is because we have a one pip spread, number one. If I'm early on this too much, then I'm really not getting my 10 pips. I'm getting about 7 to 8. And then when I move my stop, I'm not getting my 7. I'm going to be getting 6 to 5, which lowers my profitability. And so I want to get as maximum as I possibly can. Now, if it goes right on through, then I may close it right at that line, which means I'm only going to miss the spread at that point. Looking forward to playing golf today, though. Should be hot. Getting out. Paul's been visiting. That's Kim's father. He's been with us last few days. He had just departed to head back home. We wanted to spend some time with him. Had a great day yesterday. Drove around the city of Arlington visiting places we haven't seen in many years. Next week, we get into trading, but I'm also going to have to get back into some school stuff, some professional development that I have to do now that they're moving me to third. Again, as soon as you put your partial close, it's going to bounce back. And this is one of those candles you just don't want to keep waiting on. I'm going to keep an eye on that clock. I definitely want to take advantage of not getting caught in a reversal before the news. And really what I'm seeing now is if it hits, there we go. What was that position? I did it. Now we move and we see right about here to start, top of the candle, top of current candle to start, protects it. Now I can take my time and measure where I'm going with it. If it'll let me do that. So I'm going to go here. And we're right at the close right now. So I'm going to take it. I'm going to go ahead and close it because it's going to tap me out right there. And now what we've done today is we've got our 1.5% today. And we are in some trades still. We can still look at our trades, but we're not going to overtrade since we know the news is in. So what are we looking at? Why are we still negative? Well, we still have some swing trades out there. We are still sitting 7-0 if you're, and we just got a Tide Fusion sell opportunity. So let's walk this through and let's talk about this. So we can remove that one. We've already done that one today. So we can remove that. But here's where a little bit of context takes place. We got a short here. We're only 6 pips away. So I can't take that. So what I would do is I would come back to, if this is my hiccup, where's my earliest entry? My earliest entry would be right here, right where that sell line is. If it retraces back, and that's just to get me to there. I'm not so sure with the news coming out. So what about 17 pips? Right there to pivot low. So that would be my entry when it comes back here. Right now, this is a great lesson today. I'm not going to get in because there's a wall there. Just because there's a 7-0. We talked about that earlier. Welcome to the room. We've already taken 2 trades, 2 profitable trades. We made 1.5% for the day already. We're pretty much done trading as far as for our daily bread for the day. We don't want to overtrade, especially with the news coming out. So, but with that being said, I would definitely put my happy spot right here where this pivot low is, that if it happens to retrace to this spot and still holds a 6 or more, maybe 5 or more, then I would definitely take this a continuation. But my bet is when it comes up to that spot, we're going to be closing in on the 7 o'clock hour, which is just a few minutes before those major news items that we talked about. Remember, we cannot predict the future, but we can go in and look at what their previous was, what their forecast is, previous forecast, previous forecast. And I've got some real concerns here that the previous was this, the forecast is this. I'm not convinced it's going to be exactly the same thing across the board because we've had a kind of a strange quarter. with the war and stuff like that, I'm not so sure our quarter to quarter numbers are going to match up. If you have struggles with news and understanding GDP, PMI, FOMC, then I would definitely tell you to come back and go. Those who are already over there on YouTube and streaming with us right now, you already have an easy access to it. But I'm going to show you a great video to watch down here towards the bottom called News that Moves Markets 101. It's just a great short lesson, not a long one, of what the news does and what five buckets are impacted by it. So that is a great lesson. That's still a solid, solid trade. Had this not been here, I'd be in it because that zone is pretty much gone. What you're looking at is Sherlock. Sherlock identifies institutional type price movement. That's your pink and orange and green and gray. And you're looking at Tide Fusion. Tide Fusion is our swing tool, but we put it on the 15-minute chart because Al does. Al also uses uh, fair value gaps. I don't, not because I don't like them. I don't understand them yet. I will sit in some lessons in our summer sessions with Al and kind of get a feel for what they actually are. I think they're just another tool to give you visuals but we already have. There's nothing new under the sun, to be honest. But notice we got in, touched our line here, and then we're bouncing up. Now, I would not jump on this one quite yet. Kind of the same picture as we have. Where would we go? I would be all over it up here. So I would measure out from where we're bouncing now. Okay, so really where we got in before, just at the top of that candle or that arrow would be where you could get in first. But it's going to, the more I can dig into this, the better off we're going to be. So I'm going to go ahead and remove this since we've already done that. And what a fantastic day. That was interesting. So we're just going to sit here for just a moment. We're not going to sit here all morning because we know we have news items. So let's look at our radar again. Yes, okay, that's a great question. Uh, Great question. Is this the only 8 pairs that we trade? No. You'll see over here we have a list of watch list. If they're yellow, historically they have not worked as well. That doesn't mean they can't work. So, for instance, I want to take the Euro Aussie and look at it and see where we're at. 4-0 shorting opportunity. It looks a lot like some of our other ones. Aussie CAD may be one. You can see how it's grinding. Its picture's not good. We can't get into this one anyway. So you can Aussie Yen coming into a buy area, but it's not giving you a buy signal. It's a 6-4 flip. So we do have other things. We haven't looked at the US Swiss. Ooh, yuck. Now notice how we got the US dollar strength, but we're sitting into a wall. We can't do anything with it. So we can use Sherlock and we can use our tools to quickly analyze the radar. It's a 6, but we're into a wall. So if we had the US strength, which one looks the best? In my opinion, the US CAD, but it hasn't crossed yet. The US CAD or US yen. But remember, we're sitting, look at that drop right there. Let's see what the dollar's doing. And there it is. It's just respecting this Sherlock zone. It kind of broke through and we got another one right above it. So we're going to have a little hiccup before that news item today. So drinking water from a fire hydrant at times. Let's dive in just quickly since we're sitting here and watching here. Let's go into our euro pound. And let's show you what we did with the euro pound since we're in a swing trade. Now, swing trades are a little bit different. Obviously, we're going in for a longer period of time. You can see where our stop is. Since we got in this trade, we had a new Sherlock zone created, which is in our favor on a 4-hour chart. Let me just refresh this just to make sure that everything is clear and clean. We're making a little bit of money, but that's nothing. In a swing trade, we should have already been there. And we've been in it for days now. Here's our sell signal. It's just not good. Very, very flat market. Here's where we got in. And the nice thing is we got a sell signal before or right after, and then a Sherlock. So we've got a lot of stuff in our favor. We have a new Sherlock zone here. We have a Sherlock zone here that we got in that was there already. Our stop is well above it. We could possibly even potentially bring it down, but we're going to give wiggle room. And if you notice, we employ the same kind of tactic. We set our stop. we set our target, and then we set our midway point to where we take a portion of it off, because the last thing you want to do is see this thing go from your entry to 70, 60 pips and then turn around and go against you and take you out. So at this point, we take 25 off and we move to the most reasonable. In this case, it's this one right here. We'll move this down. It won't be profitable. It won't be a profitable position yet until it gives us something new. With swing, we do it a little bit different. And I may adjust that from time to time, but by the time we get down here, we should have had another um, uh, Sherlock zone showing. But when we look at swing, we definitely want to look at that uh, 1 day, and you can see high, low, lower high, same low, lower high, same low. This is a perfect picture of a wedge, and it's going to break out one way or the other. And we're expecting the pressures overall down. We're expecting it to move down. Now, you want to know why it's not moving? Hercules is right now. Remember, Hercules is sitting on fast right now. When we do day swing trading, I go right to moderate or slow. But notice it's not changing anything. It's still going to be the same. And so that's a little swing trading there, but you can see why we're going to be in it, and it's going to be a while. So I may have to stretch this line out a bit because I think we're going to be way out here, to be honest. And that's okay as long as we continue to make money on it. Because owning, I believe on this pair, owning short, we're actually making the money on it on the swap fees. I'll have to check my chart, but I think that's the case on this pair. Let's look at our pound yen because I really wanted to trade this morning. It was a 5 earlier, and it really structure was really good. However, I was going to short it, but I am shorting it on the swing trade. So you would say, why are you short the swing trade? Well, I'm glad you asked. We came into this nice zone. It did a retracement back up for me. It was not a tide fusion, but it was a structure trade based on the highs that we were at. Um, and you can see the yen is still a stronger. It's just not, it's just nice parabolic move followed by a flattening. And I just think we're going to turn over. And now notice I have to go through a floor and I have to go through. So this one's going to be a struggle, I think, but it's there, and we saw it. We did the analysis of it. It looks a little bit better on the 4 hour, not much better, but a little bit better. You can see where the turnover's happening, and you can see we got a sell signal, and that's where we got in. We got it on the sell signal based on the crossing of the tide fusion, based on the sell signal, based on the fact we had a new Hercules Sherlock, and then this is pretty much chewed up. So we've got room on a 4 hour to actually hit our line. So we're kind of hoping to grind through that. Yeah, so it's really been a booger to hang with. But again, we've got our two spread. It's not a whole lot, but it's still in our favor. And that is pretty much where we're at today with all of our trades. And for the 15-minute chart, I would not short this at all. And we're at 6:45 now, and not a whole lot happening here. If you notice, right where we got out, it's kind of paused for the moment. And I think we're going to see that become more evident. I think things are going to pause. Our US yen is kind of recovering from a little bit of pushback. That would tell me that our dollar probably bounced just a tad more up, and it did. Our gold's probably still, yeah, our gold is kind of lingering right where it was. Our Q's pulling back a little bit. We've had a rough triple Q's. Our oil's still climbing up. Nobody knows what to do. Again, I think we're going to go back to that swept 74, and then we're going to fall again based on the news today, I think. All right. Any questions in the room? That's a 45-minute lesson, 50-minute lessons. Lots packed in a short time. But we don't want, because of the news, we already got our nearly 2% for the day. The pound US is now definitely breaking down now. So let's look at that one real quick. Good call. I don't like it still. I think we're going to go down here, but I still like the happy spot. Now, if this closes like this, a little further down, then we may consider this all pullback. But remember, we're only about 30 minutes from when things start getting really crazy. All right, guys, we're going to call this a day. 6:45, had just short of an hour. Lots packed in here. Thanks for joining us live as well as in the Zoom room. I hope it was beneficial to you guys. I'm not sure about a session tomorrow morning. If we do decide to have a session tomorrow morning, I will definitely post it in Telegram and let you guys know. Um, Been a joy. Love doing this. Again, check out the videos. If you have not done the video series, especially with members, check out this. This will solidify a lot of what you do. My members, you really could help you figure out where you're at in choosing your lane. I will share with you that you can see right here, working on our legacy compass, and that was a booger, all over the place yesterday. Doing really well with that. And Legacy Compass is going to be our wealth accumulation tool. As I mentioned yesterday, trading and investing is hard when it's in the short term. It is hard. As we mentioned, 95% of traders do not make money in day trading. So you've got to have those tools ready to go and know how to use them. Sherlock, the indicator that you see on the screen with the institutional colors, that is with membership. You automatically get that. Hercules, if you want to use it, it's there for you. It's there as an add-on, but Sherlock is for free. You need tools that are going to help you if you're going to day trade or even short-term swing trade. Um, it's just not. And I think that's your income maker. Once you get it locked in, that's where you make your income. It's not fast money. That's the Geez, everybody's talking. I got to make fast money. No, you don't. Fast money earned is fast money lost. We're looking for stewardship here. And so, what's been put in my mind, in my vision, is Legacy Compass. That is going to be a wealth building system. It's going to be designed for the 1 day, 3 day, 4 day chart. And it's going to be a tool that helps you identify any asset class that is strong and moving right over a long period of time. We're talking even decades. So let's just go triple Qs. Not that one. I don't want that one. What was that? Was that would be Euro. That would be what was that? Euro US. Nope. Euro Aussie US. Nope. Heck, I don't know what that one was. Let's find what it was. I'm looking at my screen like I've never seen it before. Got my Aussie US. Uh, That's Euro pound. There we go. I was thinking that's my swing trade. Euro pound. So let's go down here. Let's go gold. Let's just go gold. We've been talking about gold a lot. Again, this is a free lesson for you guys that are interested in wealth accumulation. So let's talk about the real thing. As a financial planner back in the day, and by the way, we'll be getting my licenses again, I think. Going to be licensed through Dave Ramsey here shortly for budgeting and planning. But I think I'm going to go ahead and prepare for my Series 7 again. I let that lapse, but I think I'm going to do it. And that way I don't always have to say this is for education purposes only. I can be a little bit more helpful in that regard. So, what we're looking at, let's go with a 5 year. What we're looking at is a typical weekly chart. And had I told you, let's just squish and squash, and this is gold. Now, hindsight, let's just say, let's go back. Let's just say back 10 years ago ish. We'll go right here. And you already know what gold's done, guys. You already know. And hopefully this is a good nugget. And so what I'm looking for, and I'd blow this up a little bit better, hindsight. What we're looking for is assets that have historically moved from left to right up over decades. And gold has done that since the beginning of time. Couldn't probably pick a better one. When we see when we see things happening in the market like this is panic selling. Is all that is. I'm going to take my profits, panic selling. If these people that were holding gold at $400 an ounce knew today, 10 years later, 15 years later, 20 years later, whatever it be, that we'd be sitting where we are, do you think they would have sold? No, no. Now, I would have sold if I was in a protected account. What I mean by protected account, an IRA, self-directed IRA, an account that would allow no tax consequence for capital gains. So as soon, in theory, As soon as this turned red, I would be selling. And I would be waiting for a signal of some sort to go long again, where the value is. We're looking for value. Well, my tool would be telling me that the value would be right about here where, and Tide Fusion is kind of close to what we do. And again, numbers aren't right. Notice where price changed to green right here. So I would be giving a value alert, not a selling, not a buy. It would be an alert. And in theory, I would be pouring some money in here, not knowing if it was going to go down. I have no idea if it's going to go down. And let's just pretend this is not a tax account. So if I was in this, I'd still be holding it. I would still be holding it, and I would still be adding. So I would have taken this drop, and along the way where the value was identified, maybe here, maybe here, maybe here, I would be adding to this account periodically, systematically adding, accumulating, wealth building, not just make income generator. So I would be building, and I would be getting a dollar cost averaging. If you've ever studied any sort of, it's called DCA, dollar cost averaging. If you've ever done dollar cost averaging, you understand what we're talking about here. And so I would be buying here, regardless of what was going to happen here. I'd be buying here. It just happened to make me real happy in the few weeks that followed. I went from 250 to 340. Now, if you're trading or investing in this, you made your 10, 20%, you'd got out. But that's not wealth building. That's not wealth accumulation. That is trading and investing. Nothing wrong with it. Different plan though. So again, I am still looking for opportunities for value. And so if I was in a tax-bearing, tax-free account at the time it turned red, I would have sold out. So I'd have sold out here, not experienced the huge loss and wait for accumulation opportunities. And I'd accumulated here and notice it turned green. I would accumulate it here again. And then as we're going into a trend to the up and to the right, now we're into 2001. We're still 20. Now, along the way, I'm now buying still at 250, 260. Along the way, there's still value, even though I'm on the left side of the green lines, periodically, systematically with a plan. Every week, every month, whatever your plan is, you're going to pour into an asset to accumulate as much of that asset as possible. Logically, this makes sense. The problem is most people can't be disciplined enough to remove the emotion of being in an asset that long and being patient for it to grow. But that's what the wealthy people do. Wealthy people do this. Wealth building, it's stewardship. It's not in and out. Now notice we're in it. We have no red. Here's a red. So I would have been out here, but if I had a tax protected account. And so I'll be growing here. Now, all of the stuff that I bought back here is growing. The ones I bought back here, we'll see. And then it continues to do its thing. And it continues to move to the up and to the left. And now we're a few years later. And let's just fast forward. And we kept doing this accumulation, $25 a week, $25 a month. It does not matter. You accumulated and accumulated, and you're buying. At this point, you can't buy gold at $25, but you in your account, your brokerage account, they'll let you do partial orders. So you're still accumulating the asset systematically and without fail. And then you go red, and then you sell off. And you wait for some discount. Now, this is not the same kind of discount you got at the 260 mark, but it's still a discounted, and you don't know that yet. You're thinking, oh no, panic selling right here. Panic, and that's what we're looking for. That's what institutions do. They wait for people to panic sell and then they buy back into it. When the market crashes, those are the best times to buy and sell. Um, and so here again, we're buying at discount, and we're still accumulating more assets until again, here's our golden area right here. We're getting in on the flip side, and then we're selling again, and then and we really don't have to. These are weekly chart candles, so we don't have to watch this all the time. That's another beauty. And I will show our team, our membership, I'm going to show you a way that you can pretty much automate your whole banking system. So I can take my payroll check, put it into a particular bank, and that bank will sequence it out to wherever I want it to go systematically without me thinking about it. So part of what we'll be using it in my household for is to systematically pay off my daughter's student loans. I won't have to look at it, won't have to think about it. It will do it for me based on how much income I put into that account. A percentage of it will always go to that debt retirement. A percentage will always go to our church tithing and offering. That's what we do. A percentage will always go to an investment account, always. And then we have our spending. It'll keep me on a tight budget. So we're accumulating, we're accumulating. Remember, we bought back at 260 20 years ago, and now we're getting closer to our term and saying, well, Brian, it's 2026. What can I do now? Well, the same thing we would have done 20 years ago. Nothing different. So we're buying at discount value. I don't know what that is. Well, our compass is going to show you that. Uh, it's going to give you alerts. It doesn't mean anything other than it's going to give you where there's potential value. That doesn't, just trust me. When you buy here, expect it to go down. Just saying, at least initially. But if it's been going to up and to the right for a decade or more, you can also go that route. Now, with that being said, we're sitting now and we had this decent discount here in 2023. Let's just say we did it back then. That's not that long ago. As a matter of fact, most of our members have been with us since then. Let's say we started this here. We would have bought in at 1600 and we would accumulate it as we went, and we would have continued to accumulate where it showed discounts happening, even if it's on the left side. We had this crazy parabolic thing happening, and right now we just turned red, and we've been getting out if we had a protected account. We were at 1600 3 years ago. We are now at selling off at a little bit 4.4. So you doubled your money in a very, very short amount of time by accumulating and dollar cost averaging. Um, Helps you out. And if you're able to do it in a protected tax account, it helps you out. And if you're not, I hate saying this, if you have time to manage your own money this way, then why would you pay somebody 3% plus? Even though I'm going to be licensed and series licensed, why would you do that? That 3% compounded over a 10-year period of time can add up to a ton of money, and it's just being wasted if you're able to manage yourself. And I think you guys are fully able to manage yourself. Now, let's just say this. Everybody loves Ford Motors. I don't know why, but I will show you Ford Motors, and I will show you on a 3-day chart, because if you love to accumulate Ford, now again, accumulation value zones, um, things like that. Remember, we said we have to have an asset, whatever asset it is. It could be an ETF, it can be an index, it can be a stock, it can be Bitcoin, anything like that, crypto of any sort. It has to have a time period. I would say at least 5 years, if not 10, of going up and to the right. Not just because, man, I drive a Ford, they're coming out with some great stuff. I love it. That's trading and investing. If I'm looking at this, do I really want to buy it and hold on to it for wealth accumulation? Absolutely not. It is not moving to the up and to the right. It's actually met its peak back in 1999. It peaked again in 2021, and it's kind of failing. And so, again, we want to be very, very careful that when we pick the asset, that we are growing and accumulating. And there'll be videos on YouTube of all about the compass in the near future. I'm guessing it'll be done sometime in July, August. Obviously, I always seem to finish things right before school starts. But this is going to be a pretty self-explanatory system. It will not be hard. But this is not an asset you would want to buy. Let's go to and hold. Remember, we're buying to hold. Um, you could have bought it here. You could, but I want an asset that's showing. Now, if it was just this, different ball game. Different ball game altogether. If this was 10 years, this would be a nice little area to potentially get involved in. So let me just show you Bitcoin, because everybody likes to talk about Bitcoin. Or and whatever, however Bitcoin goes, you got your altcoins too, Ethereum. I would not go into altcoins with this, to be honest. And Sherlock won't work on Bitcoin, by the way, so you're not gonna see all that. This is weird. That's a month. Let's go 3 days. Where is my chart for Bitcoin? Way down here. There we go. There's Sherlock. It did pop. I didn't think it would. It did. Okay, so here we go. Again, one of the wealthy people that introduced me to this, what he was doing with wealthy accumulation, he actually, yeah, he lives in Austin, not so far, but he was showing me what he does, and now it makes sense. He has something similar, but he bought back here, um, a risk taker. But again, 10 years, let's just say we got, this is our 10-year mark. We went up and to the right for 2 years. That's not enough, but this is. And so now we're up and to the right. We would have been accumulating back here again in 2020 and if you understand Bitcoin, there's some other things going on here, halving and things like that. So it's not just, oh, wow, that's a down. This is a halving situation. And so you've got accumulation and up, and now we're in an accumulation spot, except we're not in an uptrend anymore. So notice we got red again. We're in accumulation spot. So if you really believe in Bitcoin, that's a big one to take advantage of. Yeah, let's look at that one. Yeah. This is a not a go wrong one. This is one that's not going to have the history, but I think anything this guy touches is going to go to gold. So um, again, had you believed in this in 2020, even if you came late to the game in 2023, here's your accumulation spot to start. 2023 was a great time to start. And then you just start accumulating. So this would have been discount. You probably would have added to this. You could have got out here, accumulated here, and then accumulate as you've gone up, turned red. You would have got out here. You would have accumulated here. You would have got accumulated here, possibly here. And again, this is 3-day chart. So the system's going to be better on the daily chart. It's going to give you more opportunities for accumulation, but you want to look at the three for the way to get out. Okay. Very responsive. Yeah, yeah, yeah. Hopefully that was interesting. Had nothing to do with our overall trading, day trading and investing short term. I just remember investing short term is an income generator. It's not a wealth builder. And what I'm doing with my trading, man, I'm thankful we got out when we got out. We did real good today. What I'm looking to do with our income here is transfer it from my broker that I use into my wealth bucket of my other broker that has my IRA in it, and it'll do it automatically. So if I have a certain percentage I want to pull out, once I pull it out and move it over to my sequencer, it will disperse that where I want it to go to, whether that be the student loan debt. Let's just say I make $300 in a week trading, and I want to keep my balance the same, $300 a week. I can move that $300 into sequencer. The sequencer will take a percentage of it, put it to the debt retirement. It will take a portion of it, put it to my 401 or my IRA, and it'll put it wherever I want it to go. And it does it automatically. I don't have to think about it. I just have to start the process. Pretty amazing technology that we can use that I'm going to introduce to our members. I think it will really help you stay disciplined with your stewardship. Any questions at all? I went a little longer and got you guys a little bit of a preview of what's coming. Boy, am I thankful we got out of the Euro Yen, Euro US. Again, the Euro Yen, especially because it's only a 3 spread right now. The US is a 5. There is the pound US is still 6, but it's not giving me anything. Everything else is being choppy. We talked about that being this morning choppy. And we're right at that time. We're at 707. So we got several people watching YouTube. Thank you guys. Just a little lag for you guys, not far behind. A few seconds. Thank you for being here. I'd like to know where you're watching from. Are you listening through your car? Are you watching on your PC, phone? Put it in the chat box for me. I'd love to see how you're listening more than anything else. And thanks for being in the Zoom room as well. I kind of neglected you guys, but I can see if there's questions or not. So Nobody wants to tell me how they're listening. Scared. All right. All right, guys, I'm going to go ahead and call it a day. That's 75 minutes of video trading. We've already made our money for the day. Phone and computer, fantastic. Mm, Hopefully, you're not driving. I'm going to try to have Al stream once next week. I'm going to see if I can catch it on the phone as well, just to see how it responds. Keep an eye on that US CAD. Keep an eye on the US yen if you're going to continue to trade. This today, I'm not going to continue to trade today. I'm going to let it do its thing. I don't want to take what we've earned today and lose what you earned today, since we've already met our goal. Fantastic day. Guys, I'm going to call it a night or a day. I'm ahead to get myself ready to go to a nice golf match, which will be fantastic. Get to go visit with a friend. You guys need to take time to enjoy your day as well. And hopefully, we'll see you guys tomorrow. God bless.